Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of what is IRS Form 8938 and who has to report specified foreign financial assets to the IRS. Form 8938 is primarily used by individuals, trusts, estates, and entities that have what's called specified foreign financial assets. Typically, it's going to be your bank and investment accounts, your life insurance policies, pension, things like that. There's always exceptions, limitations, and exclusions, but for the most part, very similar to what you report on the FBAR, but it's actually more expansive. For example, you may have a stock account, and that would be reported on both forms. A stock ownership, let's say a stock certificate, well, that's not an account. That's not reported on the FBAR, but it is reported on the 8938. With the FBAR, you're just reporting maximum balance. With the 8938, you're reporting income associated with the assets. You have to total the income and then break it down. Is it dividend, income, interest, royalties, capital gains, etc., etc. The most important question, of course, other than what do I do if I didn't file it, is who has to file in the first place. So generally, individuals, trusts, estates, entities, and anybody who has foreign assets may have to file it. Typically, it's going to be individuals. So why don't we go through the basics for individuals? The threshold requirements are different. With the FBAR, it's just $10,000. If it's more than $10,000, you file it. With the 8938, there's different thresholds depending on whether you're a foreign resident or non-foreign resident, and whether you're married filing joint, married filing separate, or single. If you're single or married filing separate and you're a non-foreign resident, it's going to be more than $50,000 on the last day of the year. Or if you have less than $50,000 but more than $75,000 on any other day of the year, you still file it. So, typical situation: someone may have $44,000 on the last day of the year. They may think they don't have to file it, but it turns out at some point during the year they had $750,000 in there from the sale of a home that was transferred in there, maybe sale of stock that was later taken out of the account, even for a day. We get that question often. It was in there for a couple hours. Well, if the balance is going to show that it's more than $75,000, then the concern would be the foreign financial institution, or the FFI, may still report it. So it's just something to be cognizant of. If you're joint, then it doubles. So it's more than $100,000 on the last day of the year, less than $100,000, more than $150,000, you still file it. If you're residing overseas and considered a foreign resident, then it's an even higher threshold. Single or married filing separate is going to be more than $200,000 on the last day of the year, less than $200,000 but more than $300,000, you file it. For married, filing joint, you double that. So more than $400,000 on the last day of the year, less than $400,000, more than $600,000 any other day, you file it. There are some traps for people who want to just go back and quietly disclose for prior years, so you want to be careful. For each their own, right? If your goal is to do a quiet disclosure, you convince yourself you won't get caught. Maybe you won't, right? Not everyone does by a long shot. But something to be concerned with is, unlike the FBAR, for example, I compare those two forms because they overlap and they're very common for individuals to have both of those forms to file. But the 8938 asks very specific questions, such as, was the account open for this year? Was it closed in this year? Is it an account with a spouse? Was there any tax liability as a result of the accounts? This is important because if you go back and just mass file a couple years worth, and then you don't mark off that the account was opened in that year, for example, let's say you go back and you file 14, 15, 16, 17, 18, but the account was opened in 2004, well, you're not going to mark off that the account was opened in one of those more current years. If you happen to be up for audit, if the IRS gets any documentation from the FFI regarding your account, they may say, hey, well, why didn't you file it those 10 years prior if the account was open back in 04 or 99 or whatnot? Just something to be aware of. We have lots of information on the website, goldinglawyers.com. We have lots of presentations on 8938 and FATCA, FBAR. It's very common. If you want to schedule a reduced fee initial consultation, something to consider. Otherwise, my name is Sean Golding. Thank you for your time. Enjoy the rest of your day.